Good morning, everybody. Hope everybody is well. So today, I'm obviously breaking down Thursday, the 2nd of July. Some of the macros that you should be looking at this morning. I do this every single day, and yeah, so make sure you obviously like and subscribe, because then obviously you'll get my breakdowns every single morning. Right, what we are looking at today, before we obviously pop into any charts or anything like that, we want to obviously look at the expectations of what is going to potentially happen, and we want to look at what is happening. So we've got a bank holiday for the US tomorrow. So normally non-farm payroll is on a Friday. They pushed it to today. So the key things to be looking at, not really much beforehand, but obviously we do have an unemployment rate for Euro, 6.3%, expected to stay at 6.3%. And so let's wait and see what happens here. We've also got a 130, we've got non-farm payroll here. The unemployment rate, I think, is the key one. Jobs have been all over the place, so completely all over the place. And so yeah, that's always the one to watch. 9 times out of 10, this number here, this forecast number for jobs, is already priced in. All right. So anywhere around this, from like 120 to 110, you're not going to see a lot of change. If we breach that 120 or come below that 110, then that's when obviously non-farm payroll is brings in lots of activity. So that's obviously one thing to look out for. But yeah, don't not look at the unemployment rates. If this ticks up higher, that's very, very bad for the US dollar. If it ticks down slightly, lower, what will that mean? That mean that there's less kind of pressure on them. They can reduce interest rates. There's a lot of pressure on the Federal Reserve in regards from Donald Trump. He's already had his ruling from the Supreme Court that he can't control them, he can't do anything about them, so they are their own entity. But obviously having a lower unemployment rate is obviously very, very, very good for a currency. And if you look at it, it's going to give them a bit less pressure, in regards to obviously what they are, looking at here. So it might indicate that the Federal Reserve, the US, might start dropping interest rates. What does that mean? All right, lower interest rates means the big money coming in doesn't get as much back, as much obviously interest back for obviously the money it's putting in. So what does it end up doing? It might look at putting that money into Europe, UK, whoever's obviously got the slightly higher interest rate and the best economy. It's not necessarily just about the highest interest rate. It's about the stability, of the trade potentially that they're going to execute. So, we're going to have a very, very hot afternoon. We're going to stay away from obviously pre-trading 130. We're going to be active probably till about 12:30, and then obviously we'll pull out, and then we'll wait and see what happens. And so that's obviously what we're kind of looking at this morning. Hopping onto the charts now. Where are they? Here they are here. Right, so this was obviously a trade that we had this morning. I don't actually think that pound is going to continue that much higher. I've taken my profit here at TP1, but obviously, you can see on a lower time frame trend continuing. Now, this week's been very, very tricky, right? We've obviously had a lot of divergence. We've had a lot of ups and downs. I think gold particularly caught me out. I think it's caught me out every day this week, which is rare because it doesn't normally do that. I've got a bit of work to do this week, hoping for a good day today. Now, one thing that I wanted to go over before we obviously hop onto any charts is how, don't think in trading that you only need one strategy. You do need multiple strategies. Mine's been my overall intraday trading strategy has been working incredible, and obviously, it will still continue to be working incredibly. But if you see a couple of days during a week where the kind of intraday time frame's not working because you're not getting those continued moves this way, you're getting moves doing this. All right, now intraday is you're just gonna get caught 'cause you've got to catch it absolutely spot on. So what I am doing today, I'm just dropping my time frames down, making my risk a bit smaller, making my targets a bit smaller, and hoping for, well, not hoping, because we've already started off very, very well this morning. You can see here, if I was to go on history, I'm pretty happy, right? We're going to obviously continue to obviously, trade at a bit smaller time frames. Yes, it's a bit more activity, but it means that obviously I'm also reducing risk. Where I would have like a 30 pip stop loss, I'm going to have probably less than 10 on majority of the trades that I take. So that's that's my plan for today. But it's a bit of an explanation, as you've got to have all the kind of trading skills in your arsenal. Don't think that you're going to go to one place, learn one strategy, and it's going to work in every single market. Obviously, that's the beauty of the macro outlook. But then we've even had things like divergence happen this week, where we've had the dollar pumping, we've had yields pumping, and we've had gold pumping. There's all kinds of factors that you got to take into play. So what I try and make sure that everybody understands is you've got to understand everything. If you want to master this, you've got to understand how everything works, that's, well, it's like any skill in life. I play obviously golf to a good standard. I can bend the ball right to left, I can bend the ball left to right, I can hit it straight, I can hit it high, I can hit it low. It doesn't mean I use that all the time. If it's a really, really windy day, or naturally, apologies if this is boring you, but naturally, obviously, I hit the ball high. All right. But obviously, if it's a very, very, very windy day, I've got this skill here where I can hit it low. And obviously, trading is no kind of different to that in regards to markets are either doing, markets are either doing this, right? They're either doing this or they're doing this, right? But at the moment we got this, which is really, really hard. And obviously the reason why obviously markets are doing that is because you've got this escalation risk here. It's this like dark cloud here, which is it's not being resolved. Obviously, I've come out to Dubai for a few weeks, just sorting some things out here, and obviously even I'm quite keen to get home, because obviously if we get an escalation, flight's going to be cancelled, blah 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 blah. But obviously it's mainly about the strait. There are ships coming through it, but everyone's on edge because something could happen at any time. And obviously once that's cleaned off, once it stops, then we can then start to kind of chill out a bit. So that's obviously one thing that we've obviously got to be aware of, and that's the beauty of macros. You've got to understand why everything is doing what it's doing, because yes, technicals are brilliant, they're fun to plot trades out on, but actually it's the understanding, it's the making sure that you understand that it's not a candle or a pattern that's highlighting something incredible. It's what's going on in the background. It's the macros. So dollar here, if we look at it on a kind of overview, this week's been horrible. It's not really done anything. We obviously had this crazy candle yesterday, but we're still staying in this range. I actually think dollar could potentially push and finish the week comfortably above 101,500. We've got obviously yields here too took this big drop, but obviously what's ended up happening, they've continued up and they've stayed up in this area. I had these traffic light, for obviously those of you who watch these avidly, red is danger, and obviously orange is amber, and then obviously below here is green. So we kind of want yields trading round here. It's that's gonna prove to us that there's proper de-escalation with the US and Iran. But obviously remember, yields are the big money coming into the US dollar. So looking across everything else, let's just take a quick look at the stock market. I'm just going to move this over. So yeah, stock market I'd say is about break even. We then got Aussie, which Aussie's not doing anything right now. We've obviously had this consolidation marked up for ages. So I am waiting for a breakout. Pound, happy we've come out of that one, but I do see the dollar strengthening up. I do see this kind of turn happening. Euro not really doing anything. Remember, the dollar and euro are obviously indirectly correlated because it's the most traded FX asset. All right, I think like between 60 to 70% of FX trades all the time are between euro and dollars, and if dollar is climbing higher, euro is going to naturally go lower, and vice versa. But euro's in economically not the best place right now. Gold yesterday was horrible. We had this no pullback, just kept on pushing, and then in the evening we had this pullback straight into this area. It's purely just wild. I don't like to use the word manipulation, but yeah, I think whoever was pumping the market, because don't think it's a lot of people who obviously pump the market. It's a small collective group of obviously high net organizations. All right, so they've clearly taken or unwound their profits out here slowly, and then it's kind of still trending to the upside, but it's pretty slow. So that's obviously one thing to be aware of. Gold I can see pushing higher. It'd be interesting. The levels you want to have marked out here are 110. Right, it'd be interesting. I mean, if this breaks higher, then we're probably looking at targeting this potentially even for 200. But then I'd draw a box around this 450 area. So I'd be looking at this. I think if this breaks, then yeah, we'll obviously see continuation to the downside. But what's interesting about gold is it's not acted as a safe haven during this war, because oil has, all right? And I feel personally, because obviously oil tankers are creeping through, so oil is being flooded in the market. I know all pump prices have dropped here because everyone's rushing obviously to get their fuel. It still happens here, even though fuel is cheap here. I do, gold is acting as a bit of a tailwind, safe haven, because there's trickling. Remember, Iran has 20% of the world's oil supply, so that's trickling through. So naturally the price of oil is coming down. And interestingly enough, obviously gold is acting as that, that safe haven, like it would 99% of the time. So it'd be interesting to see how long this can continues. But no, I'll keep you guys updated with everything, and yeah, let's make sure that we have a good Thursday, and obviously trade carefully. Don't have any trades open around 1:30 today because it's dangerous.